Good evening. This is the Elliott Wave daily update for the NASDAQ 100 and the S&P 500 for Thursday, September the 12th, 2024. And again, the market traded in line, actually, more with the flows and the capital flows, the options flows, and how the gamma levels were being triggered. And so let me just kind of review a little bit on that level. It all continues to fit into the Elliott, but the Elliott is kind of ceasing to be real clean. And that makes it more difficult to kind of pinpoint what we likely will expect to come next. And then because I talk about it, I put it out there, and the market does something totally different. Now, that doesn't necessarily fit right now. But what I do agree with, and I want to thank you for those that are putting the comments out there, because it's very helpful to the conversation. And it also is very helpful in just trying to really pinpoint what we're doing. Now, before yesterday, I had left this that minor four was done, and it basically was done here. And that was the E wave, and that we launched higher in the beginning phase stages of that minor wave 5 up. Then, taking a step back, watching how the market was trading, it also gave rise to the fact that, well, the D wave, if it is indeed still a triangle, the D wave could still be underway or in force. And today we saw the market again rise, not as strongly as it did yesterday, but it was up over 200 at one point, coming back off a little bit now as we get into and now finish up this extra hour after the regular close. And you can see I took the D and the E off because I agree, not that it's impossible for it to have done that. The way it unfolded, the quickness of that four, it was like, bam, done, and off to the races. And in the next signal up. And that truly did not sit real well with me, but it fit. I saw the three. I could not necessarily the E wave, a very bizarre, odd three, but still can be put in that way. But then when I stood back and I thought, okay, Michael, now give it the old look and feel. And this was after the fact, after, conversing with subscribers and talking about what they were seeing and what it possibly could be. So I want to just kind of revise. I'm leaving the triangle pattern in play for right now. But here's what has to happen. I of course will put the D back on. If we start to decline substantially enough where I can get it, I would put the D here and we'd be looking for an E wave down. Now the E wave would have to kind of fall within the reality of this very sharply rising boundary. And so that kind of says that the market can come back below 19,000. And to be honest with you, we can run a very quick fib. And because what we look for is that, nope, I did it the wrong way. Let's do it the other way around because it's coming down. So we're going to start there. And we're going to go down to here. So if we're looking at, no, I had it right. Sorry about this, guys. It's kind of been a long day and it's been weird. So I'm going to take that back off. Let's do it the way I had it. That was the correct way. And I'm going to put it back on. So we normally would look for, within the triangle formation, we look for, like, there's the wave A, we look for the wave B, and let's just run it so that you'll see what I'm talking about, because there are Fibonacci levels that are associated with it. So here, see this one again. We would be looking for that B wave to come in, and it really came in pretty high up. So I'm going to do it correctly. I'm going to remove it. Oh, come on. I didn't want to do that. Remove, remove, and let's get this right. So we're figuring out what that B wave could look like, and I want to do it actually from here. And yes, I can do it that way. So the B wave coming down, I mean, from here, we're looking for, see, it came really up almost to 0.786. That's pretty high because what we normally look for is 38.2, 50 to 62%. It bounced back. Okay, we allow for it. Now, this is in the NASDAQ. So I'm you got to allow it because it's like, well, what else would we assume that this was? And so the sticking with what we're putting here as what we believe could be enforced as the number one choice. That would be this triangle pattern. Now, the alternate to this would be that this is, again, ABC, but the minor four does end up being here. And then what this is wave one of minor wave five, wave two of minor wave five, and we're kicking off in a third wave. Now, let's bring it down just to take a look at that. It could work. It could work. Now, what we do is we have difficult, but likely a diagonal, an ugly diagonal for wave one, and then an ABC for wave two, right down here. And then we launch and the start of a third wave. Now, yes, we follow through today, but you see, I'm looking like I should be inside wave three of three. So here's the point. What we got to see tomorrow, if for this particular view, right? That wave four was done. This is wave one of five, wave two of five. We're in three of five. We're inside the three of three move then. And it can't just kind of poop out in the middle of it. It's got to kind of go. It's got to like continue to thrust. It started off great. Then we started to get caught up in a couple of things. And there were several periods today where we saw just this big sell. It's just somebody selling. And I think it was options related, but still driving the market quickly lower. Like there was at one point, just about 2:45 going on 3 o'clock Eastern. And the market dropped essentially from 19,474 all the way back down to 19,358. And it did it in 4 minutes. 4 minutes. It dropped like 100 points, over 100 points. And then rallied all the way back. So those types of moves, you're like, do we see those in a 3 of 3 type move? I guess we could. So I have my doubts about really what to label or how to label much of what we have going on. So again, leaving it in that triangle, right, where we have the A, the B, the C, the D maybe completing today, we continue to wedge. So that keeps this in a stronger favor, a stronger, weighting that this is what's happening. But now we need to see 3 coming down. And if we're really looking at it, then again, we're going to go and put in where this thing could come back to. Right now, we'd be looking like, okay, we can come back to 19,046. That would be an absolute minimum and pretty small. More likely 18,911 to 18,775 up into here. Possibly as low as that. But 3 waves. An ABC down, and we put an E. Now, what would trigger something to stop on a dime and fly higher? That's what would have to happen at the completion of a triangle. it thrusts up and out of the triangle in the direction of the larger trend. Now, we already know that the larger trend continues to remain up because we're looking for that minor wave 5. We're looking for a minor wave 5 to take us higher to new all-time highs. So that part fits. The thrust would be up, and the thrust should carry us out of this boundary. So we'd be looking for the initial one to take us right above 19,560, which is now where the top of the trend line kind of comes in. Well, today we got to 19,483. It was a strong move. And a couple of things to back all of that up. Within here, we saw the market go from a positive gamma, so risk on trade, starting here, risk off trade, starting back over here, risk on trade. And today, risk on trade. So we got affirmation from the market, basically, that the risk on trade was continuing to build today. Now, and what really produced that was going over those levels. And today, early, we saw, say, for example, in the Qs, it had 460, 463, 65, 66, and 470. And 470 was that, again, a volatility trigger. I think it was 470. Let me just double check. Let me double check on that, please. It was right. I got to come all the way down. Where is it? Interesting. There it is. I'm going to go back and I'm just double checking. I see that the window is blank, so stick with me for one quick second. And as I look at those Qs, the volatility trigger today came in at 466. When that got broken, you saw the market really start to climb, and it got right up to the 470 level. And at the 470 level, there was a lot of gamma to present as resistance. And it broke it. And it closed above it. So there was all that flurry of covering. And so it took the Qs up like 3 or 4 more points because it's closing, I think, on a downtick. Now, with that in mind, that's a continuation of the vol trade or the risk on trade. And if it continues again tomorrow, then I'm suspecting that we're going to break the next level, which is 480. Those are in the Qs. Now, all of that get readjusted then today after the close. You run all the numbers, put it through the model, and those levels, I'm sure, are going to shift. And so as we digest all of the trading that took place today and come up with the levels, if we continue to watch those levels break, then it is going to, I'm going to use the word force, it's going to force one count or the other to take over and present, both of which basically end with a strong bullish move to the upside, right? A thrust higher, a move higher, new all-time highs, a move up in minor wave 5, all of that. So what we're really trying to determine now, excuse me, is where, if we still have additional downside to do before this minor 4 is complete, what's left? In the triangle pattern, it would be an E wave. Otherwise, that's really it for downside. I don't really feel that what we got is something stronger in terms of that this is A, and that we're still, in the B, and this is wave 1 of C down, 2 of C up. This just, it's not, don't forget, wave 1's got to produce 5 waves. Not something that turns into a 3. This is 5. and this is a diagonal, but it's a 5. So it's a 535. So we're missing that additional. Unless I can go 1, 2, 3, 4, 5, which I may be able to do. I might be able to do. I don't like the way it looks. It doesn't really break any rules, except that one may be right there. All right. This is 1, and this is 2, and this is 3, and this is 4. 4 is overlapping 1 slightly. I don't know. Do we let it work? But again, on a push, I probably could force it. And that would keep this larger drop in line to come all the way down. Now, what would have to back that up? We would have to drop. See, now we have this going here. And kudos to the subscribers who are writing, talking about that that's kind of what they were looking for. And I said, I can't disagree with you. And I can't. But here we got the numbers today. Only thing that really could kick it back into gear to drop this thing like a stone comes next week, next Wednesday, as a matter of fact. And that is the Fed, right? We're running on the fuel of the additional gas being poured in to ignite this thing, that a 25 basis point easing, a cut, is going to be coming as a minimum. So the conversation really comes as like, well, is it going to be 25 or is it going to be 50 basis points? Okay, great. But then don't forget, there's that third element, that third possibility, that the Fed kind of looks at the CPI and the PPI. Now, they're all, you talk about the press is the first to jump out the gate and go like, okay, inflation is 3% heading lower. Well, don't forget the Fed's target was 2%. So we're going to start to ease now. Well, does that mean that we're going to now, okay, inflation's all tame? I don't think so. I don't think so. So they're still very much alive, that the Fed may choose to leave them unchanged again. That would kick the pants out of the market because there's so much hype and buildup to getting those lower interest rates. And what effect that will have on stocks, releasing money at a cheaper rate so companies can continue to do this, and that. That's the theory. Now, here we are. What can really propel the market is the fact that they do come out 25 basis points, maybe even 50. Okay, you did it. We're going to rally. What can fuel this minor fifth wave to take us up to 21,000, 22,000 here in the NASDAQ, 5,800 to 6,000 in the S&P before we get our next big kick in the teeth in terms of a intermediate fourth wave correction? So here we sit. We're at that level where it's like, okay, make or break time, guys. Let's decide. Because that's really where I feel like we're at. Either we're going to continue to build to the upside and let minor wave 5 unfold in 5 waves. We may come down first. Tomorrow's expiration. We could do a quick kabooey down to the downside and form 3 waves. That's all it takes, folks. It's really all it takes. And I could put an E on it and we can launch. We have now seen that several times. We have now seen, even intraday, yesterday, perfect example, right? CPI, and then launch, just launch, and then launch higher. Why? Well, they had the CEO of NVIDIA out there talking it up, and boy, they just really loved it. And he was talking a good talk, and the stock was up 8%. Oh, wow, boom. And if you notice today, if you just happen to watch, the weighting of NVIDIA now, right, is higher. And so its gyrations back and forth really kept the market being real choppy. And then you had Tesla. So we still got all that up, down, quick up and down, and quick selling So all kinds of things. So that helps to me to kind of look and say, well, we're still in this triangle. And so I still favor the triangle. So I favor mostly that this is a D, and I'd be looking for a quick E wave down. Now, a lot of people say, well, it should take longer. It's like, well, you may not get that luxury, but maybe we will. Maybe we can start it tomorrow, and then and it will end up lower and finish it up on Monday or Tuesday. And then Wednesday, we get the Fed. And maybe they do cut, and maybe they do come in at a greater rate than what we're thinking, and basis points to cut it. And then we get that pop. Personally, I think we could get this all done tomorrow. And what will really create that type of a move, the quick down, maybe slide up and another quick down, is going to be expiration. We've been through hell and back, actually, building up to this expiration. It's a Friday expiration. So this week, we've seen a lot. We've seen a lot of big bebopping around. We've seen the volatility trigger get triggered twice. That brought us up to here. Now we got another volatility got triggered again in the Qs, and we get another one triggered in the S&P. We got above, closed just below, we got above 5,600, which is neutral zone. It's like all fluff, and we're up in the fluffy clouds. So, and I'll go over that when I talk about the S&P, but we're not in those fluffy clouds here in the NASDAQ, by no means. We need to get above 20,000 before we start getting into that next line of the atmosphere and towards up towards the stratosphere. 21,000, now we're definitely heading towards those new highs, and I would definitely be more convinced that I'm above 20,000. I'm going to be fairly convinced that we're in a minor fifth wave. So there's our two towing causes right now, that we're still in this triangle pattern, and it does fit. There's our lines. We put a D there. We get a drop back down. Maybe 18,922, 18,900-ish in this area. And then boom, launch. And we just start to kind of move higher. And we come up and we break above that. Right now, we're sitting about 19,500. Excuse me, 19,575. 19,600. I mean, we were up over 200 at one point today, so it's not that hard for the NASDAQ to do this. Now we get a continued push in NVIDIA. We get a continued push in Apple. We get a continued push in Tesla. Tesla's back at that 230 level again. It's like, okay, well, now what do you want to do? So again, I went up there, and they said no. So they got it to close just below. But and they're starting to bring it down now that all the futures markets are closed. So again, a lot out there. Now, moving averages. I'm going to start. Let's take a look at that at our daily. And what do these moving averages look like? I'm just going to take this off for right now because it gets in the way. Moving averages, really, look at this 200. This is the daily 200. Do you think it could get any flatter? It's got the absolute most minuscule turn, a little bit of a rise, a little bit of an angle in the 200. And that's after 2 strong days. Could care less. The 50 went flat on this rise and is still flat on this one. What's reacting? The 13 and the 20. And the 20 just barely starting to turn higher. So if we look at relative strength, it wasn't all that great today. So, and the moving average, which doesn't measure, is sort of like, well, what's the strength of this rally? What does it look like? We start to turn higher when prices are going to start to really move, and it's not. Keeps it in that D wave, we get an E wave, and once we launch, they will follow. Okay, let's go over and take a look at the S&P. S&P is still sitting way up. And again, we touched 5,600. In fact, the high today was 5,607. So here again, the S&P moved into positive gamma territory when it broke that volatility trigger here in the futures market at 55.07. Now, today it had another task, and let me just double check, see where that level was for it today. We had the volatility trigger again, because it got triggered yesterday, but then they put another one out there at 55.21. That's in the ES, and that got taken out. So that produced another round of like, okay, let's just buy this and just keep buying it, and then let's all keep going with this. So the gamma, again, they made adjustments, right? The risk on trade really took hold again. Not so much in producing this magnitude range, but we were up over or just about 60 or just a little bit over 60. And that's a pretty good day for the S&P when you think about it. So, and we're looking for here the same deal. Now, this one's even harder for me to look at differently. Let me bring it down to the 4-hour chart, and let's open it up a little bit here. It's a little bit more difficult for me, but because this would be A, B, C for wave D, whereas yesterday I was saying A, B, C, D here, D here, A, B, C, E here, and then launch. But same deal. It's not real common for E-wave to be lickety-split done. What was common was that once wave E was done, you launch, and it made that low, and it launched higher, right, from that low. It still was red because the bar opened above it, but then the next bar launched right away, just took off. Now, so I'm leaving it within this triangle pattern. But again, what will we be looking for? Well, let's kind of just put in. I can just put it in. Let me do that again. And just run it up right there. So again, if we start to come back down from here, and we're doing to put an E wave, we'll probably come back down to that 5,500 level. That's going to end up being now strong support. It was an area initially coming off of that low at 53.94, 5,400, kind of presented some resistance in terms of being like a level that needed to be broken, and that would throw us into the positive gamma, the risk on trade. That's now moved itself up, and it got taken out again today. And now we're definitely within it, and above 5,600, it's really in a comfort zone, and we're definitely in a positive gamma atmosphere, and we'd be looking for a continuation of upside. And then we'll see things start to build in terms of where, a break would throw it. So I'm assuming that if we get far enough above 5,600, they'll start building 5,600 as support. And then see, right now it's 5,550 down to 5,500 is support. And then a break throws it quickly, could move it quickly from 5,500 to 5,400. And then again, a break there throws it down to 5,300, and a break there throws it all the way back down to like maybe 5,000. Again, I don't have those levels, but just based on what I knew previously, you get gaps where the market could just free flow down to the downside. We're not necessarily looking for that right now. At best, what I can think of in here is, see, we had already come up to within that this is a flat. If it were to be an ABC, it would be a flat. And we might see it come down here. We might see it come down just below 5,100. If it was to be an absolutely full blown. So what's going to push it there when we're now back up into positive gamma, into that risk on trade? Now we saw here as well, Risk off trade starts here. Risk off trade picks up speed here. Risk on trade comes back into style when it broke above 55.07. That was the trigger. That was the, okay, we're there. And they pushed and we closed up yesterday, yesterday we got up to 55.67 after just breaking above 55.07. It just pushed itself up to there. So today we drifted back down initially early after the opening, but then recovered and just worked our way up to 5,600. So we're into that comfort zone. We're into that area where it's like, okay, everything is fine, risk on. We don't have that downside risk. That's kind of the emotion that I think it gets into that. We're just going to go up. We're going to go up now, blah, blah, blah. So, but here, if the triangle pattern is still in play, then we're looking at that we can come down back to 5,500, finish an E wave, and then zoom up and out of there. And it really wouldn't be that great of a take. It's only 100 points. That would be a pretty good thrust, right? 55 to 56, pretty good thrust. And if it's doing it from maybe over a little bit, not even, but still pretty much 100 points. And I think it can be done. What would be the alternate here? What else could this be? Well, this actually was a cleaner ABC down as a standalone, and you could put that -4 here. Now, that plays totally against what's going on in the NASDAQ, where it's much more difficult to do that. But if you had to, in both, then this becomes 1, 2, and this becomes 3, 4, 5, one of minute wave, one of minor wave 5. That's how that can be done. This becomes 2, and this is ugly, but 1, 2, we're in a third. So there really is no coming back now. If you're in that third and you're inside that third, it's got to go. And that's what I'd be looking for tomorrow under this scenario. So if we don't, then it's still the triangle. And it's still wedging. Granted, these are big. This is smaller. This is even smaller, and this would be smaller because of that wedge nature, the wedge shape. So I'm leaving it. I'm presenting both sides. What am I leaning on? The fact that it is a positive gamma atmosphere. It is risk on, is the name of the trade of the day. Risk on. And what that suggests, we sell volatility. Lower volatility suggests that the market is going to go up and we're getting complacent with downside risk. Now you saw early, they get a little weird on the volatility. But you see by the end of the day, 17. But earlier, it was 19. So, it went, but then we saw them move in with a little bit greater force. Okay, so let's take it up to the daily chart. Let's take a look at our moving averages here. I'll take this off for right now so we can actually see them. Same deal. Flat with a slight upward bias, flat with an even slighter upward bias, the 13 getting ready to cross the 20 doesn't know what it wants. So 1, 2, 3, 4 green bars, 4 with one very strong bullish day. Maybe we get the same coming back. So, and I want to tell you that kind of supports the triangle, that the fact that we're moving, but these aren't. So the relative, and look at, here's your relative strength. It's kind of like, okay, whatever you want. It's not getting up to being overbought. So it's kind of like in the middle of the road. So what is the strength here? Not evenly distributed amongst 500 stocks. And the ones that are contributing to the upside have just as much volatility to go down as they do to go up. Relative strength hinging on all of that. Again, that does not bode well for a minor fifth wave being in gear right now. And one of the components that we need to see, even though it's not, I think it could be a strong rally, but it's not going to have all that participation that we saw within wave 3 coming up, right? Minor wave 3, which was very long in forming, and which is brutal rally after brutal rally after brutal rally, pushing up through all of everything that was trying to hold it back. I mean, it was within minor wave 3 that we saw that Svig breadth indicator get triggered twice. That was in minor wave 3. Now, in minor wave 5, not going to have that same strength that minor wave 3 had, but still should have enough to get it to, in this case, new all-time highs, which for the S&P right now is 57.21. And one more time, I'm going to add that I think by the end of this weekend, maybe Monday or Tuesday of next week, we're likely going to be rolling in the future. We'll roll out to the December contract. That's going to be interesting, right? Because now we're back to we'll just walk in one day and we'll probably be above 5,700 via the futures market. And the cash will again be much lower because the cash is the cash. All right. I am going to finish it up here, but I'm just going to finish it by saying in the ES, E-wave, finishing minor 4, blowing off the top and getting itself out of this triangle to begin minor wave 5. The alternate suggests that we blast from here and get well above 5,600. In fact, up to the upper third or quarter of 5,600 to 5,700. If not even maybe reach 5,700. Should be a powerful day for the S&P. Otherwise, the downside, I'm not real sure. We have to call this wave 1. A, B, C, wave 2, maybe. But right now, I'm going to keep it in the triangle, as ugly as it looks. And we're just going to stay open to what can come. All right, that's it. The next Elliott Wave daily update will be coming on the 16th, on Monday, the 16th of September. And I should be over the weekend putting up the weekly.